on this cover, which I hope you can see, there's a picture of a woman who was born in 1854. And today, she probably gets her picture seen more often than just about any woman in America in terms of a commercial product or something of the sort. So we've got her picture up in over 200 stores, and on every box of candy. That's Mary C., born in 1854. A lot of people think this is me in drag, but that is not true. I mean, there's a certain resemblance, but it's just not. These rumors are started by our competitors. Don't pay any attention. That's our schedule for the day. And what we will do, we like to give shareholders, owners, partners, we like to give everybody the same information at the same time, and preferably do it when stock markets aren't open. It seems to us that everybody ought to be on the same playing field. It's very interesting. We don't know how many shareholders we've got. They've changed the rules over time as to registered holders and getting stock certificates and all that sort of thing. So we can't keep track of it like 50 or 75 years ago, where we had an actual shareholders list. But we're told by the people who mail out our information. It's a firm in, I think, New Jersey. Let's see, Broadridge. And they pretty well do this for very significant percentage of American corporations. So they actually mail things out for us, and they bill us for 3.5 million accounts. And I'll take their word for it. I mean, the more accounts they bill us for, we pay them by the account. So, some days I feel like I'd like to count, but that is a lot of people that trust us, and they rightly, in my view, overwhelmingly feel that they're our partners, and some of them will like reading that they're our partners, and some of them will like reading, but a great many of them just say, we've saved this money, and we trust you and Charlie, and take care of it, and I'm not going to learn accounting and try to read all those statements or anything of the sort. But we do believe that for those who do use the information we release, they should all get it at the same time. And we have a few institutions that, even though in the third paragraph of my letter every year, I refer to the fact that we want to have everybody get the same information, and that we don't feel that anybody's entitled to special meetings. We can't hold 3 million. Anybody's entitled to special meetings. We can't hold 3 million special meetings with our. Everybody gets the same deal. Everybody gets the same information. Up this morning on the internet, we put up our 10Q for the quarter, and I'd like to take through a few comments on that, and a few other comments, and then we'll get to the questions. When we get to the questions, we will alternate between those mailed in by shareholders, which Becky Quick at CNBC and people have helped her sort of curated to get what they think are the most interesting questions from shareholders. They're not from CNBC itself. They are from shareholders, owners, and we'll alternate the ones from sent in versus the ones that come here. And we don't get the questions ahead of time, and we enjoy getting surprised by, I'd say, almost all questions, and almost all questions, and we will 3:31 we'll have the meeting. So I would like to start by putting up the first slide, and which is Q1. And there we have it. That's what we published this morning. And there are really no great surprises in terms of the quarter. I mean, there are always some companies that are doing very well, and there are some companies that aren't for one reason or another. And in the end, as you can see, we prefer to use something called operating earnings. Now, that is after depreciation and interest and taxes, unlike other companies that prefer to tell you anything but what they earned. But we do separate out capital gains. Now, over time, as I've said, over the next 20 years, I would expect us net to have more capital gains than not. But who knows? I hope I'll report to you in 20 years whether that's happened or not. But as you can see, we made about $7 billion in the first quarter, and that's real $7 billion. I mean, we basically have that in cash when the quarter's over. That isn't true every quarter exactly, but we are talking about $7 billion of real money in that, and those managers who the people here saw in the movie, they're the people that work with your money to accomplish what Charlie and I never thought would never sort of came about, was sort of putting one foot in front of the other. Now, obviously, the last 2 years in particular, including the first quarter, there have been all kinds of unusual things happen in our various businesses. I mean, when we had the meeting 2 years ago in roughly the start of May of 2020, we didn't know what was going to happen with the pandemic. We didn't know what was going to happen with the economy, and everybody that thought they did has gotten all kinds of surprises since. But here we are in 2022, and Berkshire, like I say, had $7 billion of operating earnings, and we've got lots and lots and lots of companies. We've got 360,000 people out there that have taken your savings and go to work every day, and they have jobs. We deliver products, and you put up the money for it, and you deserve to. You took the risks, and we feel very good about how things have turned out, and we want to keep feeling good. And we have a extreme aversion to incurring any permanent loss with your funds. if I went broke, it wouldn't really make any difference. I mean, I'd keep doing what I do. I'd figure out a way to read a paper and watch a little TV and think about things and talk to Charlie. But the idea of losing permanently other people's money, people who trust us, really that's just the future I don't want to have. And as Charlie says, all I want to know is where I'll die, so I'll never go there. And that seems pretty sound. He has a way of.
Works so far.
In case you missed it, Charlie says it's worked so far, and we would die psychologically if we lost a lot of other people's money. We wouldn't take it in the first place. It'd be crazy to take people's money and lose it if you're going to feel terrible about doing it. So the one thing I can tell you about Berkshire Hathaway, I can't predict what our earnings will be, and I can't predict what the stock will do, and we don't know. We don't know what the economy will do and all of that sort of thing. But we do know that we wake up every morning and we want to be safer in terms of your eventual investment. Not whether you make the most money or anything. We do not want you to get a terrible result because you've decided to become our partner. And that's a pleasure we'll live by. Now, let's see what we have here. On Q2, it gives some indication of that because this is kind of interesting. I wrote a letter to our owners, and it was dated February 26th, and that was a Saturday, released. But I write the letter all through the year in my mind. I mean, I don't, we don't have anybody that sits out and writes out the letter or anything like that. I mean, this is a letter between partners, and I write the letter all year in my head. I'm writing next year's letter. I don't write out the words, but I have things I want to tell my partners. My sister's a partner, and I'm writing to her in my head. My older sister died not too long ago, but I used to be writing to both of them, in effect. And I want to tell her, what I think and about the business and what I think she ought to think about it and so on. So the letter's dated February 26th, and I said not much is going on. And actually, we might jump over to Q3, if we will. So I sent out a letter on February 26th, but that wasn't written on February 26th. And I said, basically, nothing much is happening around here. And I said, we've repurchased some shares, and we just aren't seeing anything. And between January 1st and February 18th, as you can see, we spent $2.2 billion, which is half the quarter, so probably 30 trading days in there. And we sold them. So that basically we didn't do anything. And then in the next 3 weeks or thereabouts, we spent $40 billion. And incidentally, when I say we spent $40 billion, there's one fellow in the office that does this all. I mean, he buys all the stocks, he buys the government bonds. He doesn't have an assistant or anything. But he spent $41 billion. Yeah, and he literally, I mean, and he does other things for me too. He puts together totals. He just does what he needs to do, and he's worked in other jobs at Berkshire long ago, but he likes doing what he does, and he does it very well, and we don't have a department for it. Then, as you can see, it fell off after that, and We did also in the first quarter, we spent about 3.1 or 3.2 billion, somewhere in that, for repurchasing shares. And we didn't, we talked about that in the annual report. And as Charlie would say, it was keeping us out of bars. I mean, that gave us something to do. We never do anything that we don't think adds to the value of Berkshire Hathaway, though. So we only repurchase the shares when that is the most attractive thing to do. We haven't repurchased any shares at all in April. So it's people who were looking for all these prints in the, footprints in the woods and all that is what we're doing. We're just doing it day by day as it comes along. And I think this table kind of illustrates that we spent $40 billion in a hurry there in 3 weeks. And now we're back somewhat in our more lethargic mood. But anything can change at Berkshire. But the one thing that won't change, going back to Q2, if you'll, is we will always have a lot of cash on hand. And when I say cash, I don't mean commercial paper. When 2008 and 2009 financial panic came along, we didn't own anybody's commercial paper. We didn't have money market funds. We have treasury bills. And as I may get into a little later, I'll explain to you why. We believe in having cash. And there have been a few times in history, and will be more times in history, where if you don't have it, you don't get to play the next day. I mean, it's just it's like oxygen. It's there all the time, but if it disappears for a few minutes, it's all over. So our cash was down on March 31st because, as you saw, we spent that large sum there in that brief period during the quarter, $40 billion. We've committed to buy Allegheny Corp for something over $11 billion. But we will always have a lot of cash. We don't. Some of our companies have bank lines. I don't know why they have the bank lines. We're better than the banks, and we'll give them the money if they need it. But the local bankers have been calling on them, and they need something to do. Everybody else has bank lines, so it's harmless. But there's no reason for any of our subsidiaries to have bank lines. Berkshire is stronger than the banks that I didn't hear exactly what I don't know whether that was a banker screaming or. I don't really like to torture. I don't like to torture anybody. I mean, and I'm all for banks, and we'll talk about that a little later. In fact, we might even talk about it right now, just for a minute. Money's kind of an interesting thing. People seem to like to talk to me about it. I mean, they don't ask me how to dance or anything like that, but they do. They ask about money. And so, if we'll put up 20-1, it's a photo of a $20 bill, and it says at the top, Federal Reserve notes. Now, Federal Reserve note, we've done all kinds of things with money in this country. It's amazing, country only a couple hundred years old, the number of different experiments we've made with banks and everything. But we finally just decided to let the Federal Reserve do the issuing of money. And down in the lower left-hand corner, incidentally, I think Rosie Rios, who signed this note, I think she signed more U.S. currency than than any other person in history. So if you see Rosie, you cozy up to her. I mean, this is a woman that has issued a lot of currency. But it says, this note is legal tender for all debts, public and private. And that makes it money. You can go into our candy store, and if you offer us enough bushels of wheat, we'll probably give you a box of candy. But money is the only thing that the IRS is going to take from you. You can offer them all kinds of, you can offer them paintings, you can offer them all, whatever, but this is what settles debts in the United States. And I thought that you'll hear a lot about various kinds of money. This is the only kind of money you're going to see, in my opinion, throughout your lifetime, or even throughout Charlie's lifetime. I mean, this is, it's very interesting because it just says that settle all, legal tender for all debts, public and private, and nothing else says that, except I thought you might be interested in seeing another $20 bill, and this one I own. And on that, it's got the same guy's picture, Andrew Jackson, and everything. And that's a $20 bill. And that $20 bill was issued during my lifetime. And it was done by a bank that Berkshire ended up owning. So you'll see the Illinois National Bank and Trust of Rockford. And we bought that bank back in 1969. And if you look down in the bottom of that one, it's signed by a fellow named Eugene Abegg. And we bought it from Eugene Abegg. So we still have some $20 bills. They came in sheets, and we can cut them out like paper dolls. And they're our money. The Illinois National Bank issued money. But just remember, the United States government, in effect, said that this became exchangeable for lawful money of the United States. That's what money is. It may turn out that it becomes worth dramatically less in purchasing power. It can become almost like paper money, as it has in many countries. But that is all. When people tell you that they're issuing new forms of money, this is the only thing that will pay bills under some circumstances. And there were days, a few days in 2008, and we came very close to having a repeat in March 2020. And we had plenty of money on March 20th, but we were not very, very far away from having something that might have been a repeat of 2008 or even worse. And we have a bookstore here, but the Bookworm, that's in the other room, and they've got a book called $1 Trillion Triage. And for those of you who actually like to read about this sort of thing, it's a marvelous account of what took place day by day with the Federal Reserve and the Treasury. And believe me, if the Federal Reserve hadn't done what they did, at least in my view, in a very, very, very short period of time, things could have stopped. And I tipped my hat a couple years ago to Jay Powell for acting as he did. You have to act with speed. I mean, in the old days when you had runs on banks, back in the 19th century, a line formed, and the bank would go broke. But the fellow would pay out as slowly as possible, hoping something would happen. A Wells Fargo truck or a stagecoach would pull up with a bunch of gold or something, and he'd sweet talk the people into the line dispersing. In Omaha, in August of 1931, 4 state banks, so-called state banks, they had in that day, they closed, and the national banks didn't. But they were all broke as of that day. No bank can pay off in one day all of its liabilities. But the Federal Reserve is the only one that's good at that time. But I will tell you this, Berkshire Hathaway will be there at that time. We run it on the basis that if things just behave slightly, if Frank Paulson, George W. Bush, I'm sorry, and Ben Bernanke, and a few people hadn't taken action, we were at that point where the line was formed, except it comes in electronic fund, they push buttons, and it's all over very fast if there's a run on a bank. If you ever buy a bank, and there's 2 banks in town, hire a few extras and have them go over and start standing in line at the other guy's bank. I mean, and there's only one problem with that. After a while, somebody will stand in front of your bank, and then both of you are gone. But the Federal Reserve is not gone. And the Federal Reserve in the United States can do whatever is necessary. They've got all kinds of rules about can do this or that and this and that. One time in the 1980s, Paul Volcker, who was a very honest man, said to me, and I said, what are the limits of what you can do? And he said, he was a very unusual guy and huge, looked down at me, said, we can do whatever we need to do. And that's true, and that's what happened in 2008 and 9, and that's what happened in 2020, and you hope it happens again next time. But we want Berkshire Hathaway to be there and in a position to operate when if the economy stops, and that can always happen. That can always happen. Some of those cheery words. Let's see if we. I think we can actually. Might be a good idea to start with some questions. As I said, we will have the questions alternate between CNBC, Becky Quick, and those are questions that have come in from shareholders, and they can be directed to any of the 4 of us up here, and then we will go alternate and go around the room here, and we've got the auditorium broken into 10 or 11 sections. Charlie and I one time figured out a form and said officers of the company broken down by age, and we just put all of us as an answer to that question. But we'll have it broken down by categories around here, and we'll keep alternating, and we will break for lunch at noon and reconvene at 1. So let's start off, and Becky, will you lead the way?
Thanks, Warren. The first question comes from Jack Sisaleski, and he says in the annual letter that you wrote in February 26, you mentioned that Charlie and you saw little that excites us in the market, yet around March 10th, the deal for Allegheny was announced, and then later the Occidental announcement, then the disclosure of the HP investment. His question is, what changed from the time you dated the letter to the time the investments were announced? Did the name suddenly become interesting in the space of a month and a half? Or half a month?
Well, Charlie, you want to give your version? I'll give my version.
Well, my version would be we found some things we prefer to owning to treasury bills.
Yeah. And as usual, Charlie's given the total answer, but I'll talk longer and say less. We actually the letter's dated February 26th, where we were confessing our inability to find anything, which was a Saturday. But the day before that, February 25th, I got a email. Actually, my assistant, Debbie Bosani, gets it because I can't figure out quite how to handle the machinery. But so she brought it in, and or actually she puts a bunch on the edge of her desk, and I collect them occasionally. And there was a note, just a few lines long, from a fellow that was a friend of mine and that worked for Berkshire many years ago. And this was on February 25th, the day before the thing. And he said he'd now become CEO of Allegheny Corp. I'd been following Allegheny Corp for 60 years. I read their annual reports. I had 4 big file drawers full of it because it was an interesting company, and all companies interested me. So I knew a lot about Allegheny Corp. And Joe said, this is my first annual report as CEO, and I just wanted to send it along to you, just like you write for your sisters. He says, I write this report as if I'm writing to you. And I sent a note back to Joe, and I said, I'm going to read it over the weekend or whatever I said to him on it, which was true. I mean, I look forward to reading it. And I said, by the way, I'm going to be in New York on March 7th, and can we get together? I'd like to see you. And I think I may have said I got an idea. Well, I didn't have that idea the day before. I mean, it just, this thing happened to come in on Friday the 26th, and I knew I'd buy Allegheny at a price. And if he hadn't sent me the note, it never would have occurred to me to write him and say, why don't we get together on March 7th or anything of the sort. It just wouldn't have happened, except for the fact that Joe wanted to send me along this annual report that he'd just written. So that's the orderly and decision-making progress. I didn't call up investment bankers and say, will you prepare me a report on this, and what's your advice and all that stuff. I knew we'd buy Allegheny at the price we offered, and if it was of interest to Allegheny, fine. If it wasn't, but otherwise, if that email hadn't been sent, we would not have made an offer for Allegheny. So give credit to the fact that Joe had written the annual report, and if he'd sent it a week earlier, I wasn't going to make a special trip to New York, but I wanted to sit down with him and tell him what Berkshire would do. But that explains the $11 billion. And what happened was that a few stocks got very interesting to us, and we also spent a lot of money. What happened, the market, and this is really important to understand, in the last couple of years, the stock market is it's always been a combination of a casino and when I talk about Wall Street, I'm talking about the whole capital formation market, and trading market, et cetera. But the market has been extraordinary. sometimes it's quite investment oriented, kind of like it always you read about in the books and everything, what capital markets are supposed to do, and you study it in school and all that. And other times it's almost totally a casino, and it's a gambling parlor. And that existed to an extraordinary degree in the last couple of years, encouraged by Wall Street, because the money is in turning over stocks. I mean, people say how wonderful you've done if you bought Berkshire in 1965 or something and held it, but your broker would have starved to death. I mean, it's Wall Street makes money on one way or another, catching the crumbs that fall off a table of capitalism and an incredible economy that nobody could have ever dreamed of a couple hundred years ago, but that they don't make money unless people do things, and that they get a piece of them, and and they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. That's who you